Precious metals and a self-directed IRA. Hey everyone, Adam Bergman here, tax attorney, founder of IRA Financial. On today's episode, buying precious metals like gold in a self-directed IRA. So metals have been a popular investment asset since I've been in this industry, about 12 plus years. It's had its ups and downs, right? When cryptos were super hot the last few years, metals were not as hot. When I started in this industry in the late 2009, 2010 years, metals were super hot, right? It was after the '08 financial crisis. Gold, silver, palladium, coins were super hot. People wanted stability. People wanted to hedge against volatility in the markets, even inflation. And same with the 2014 and 15s when there were potential financial crisis with Greece, meltdowns. People have always turned to precious metals for a sense of stability. So where we are today, we're in June 2022. Filming this in May, but this podcast may not launch till early June. And inflation is running wild. 8.4%. April is the highest month on record, 40 years. CPI index is exploding. Price of gas, price of consumer goods, food, restaurants. If you rent, rent's going up, and people that don't have long-term rent, leases are going to run into some pricing stress in the short term. So our economy, people have been talking recession. The stock market's off double digits since the beginning of the year. There's really not a lot of safe havens. Cryptos are down 20+%. Markets are down 20+%. Real estate, people are worried that pricing's high and interest rates increasing will put pressure on real estate prices. So gold has been the only asset that's done decently well, not amazingly well, but it's positive in 2022. Silver's a little down, but gold's done decently well. Why? People turn to stability in times of financial volatility or potential recessions, financial crisis. So I wanted to do a podcast. I've done a bunch of blogs. I've written articles for Forbes. And in my books, I've addressed how to invest in precious metals with a self-directed IRA, but I thought this was just kind of a good time to do a quick recap. So Section 408M and Michael states clearly that precious metals, pure, what the IRS identifies as allowable precious metals, which I'll get to in a minute, is not deemed a collectible. That means you can invest in it with an IRA. So what does the IRS define as an allowable precious metal? It says any coin, which is a gold coin, silver coin, platinum coin, a coin issued in the laws of any state, or any gold, silver, platinum, or palladium bullion of a finesse equal to or exceeding the minimum finesse that a contract market allows for, which is basically 0.99% finesse. So good quality bullion metals, so bars or American Eagle state minted or bullion coins. Okay, so the quality is important to the IRS. You can't buy these commemorative coins that are on TV or in the internet, Civil War commemorative coins or 9/11 commemorative coins or things like that. It needs to be actual high quality finesse metals because, again, they don't want the metals to be treated as a collectible. They want it to have real value. So there's a marketplace for these coins and allowing retirement account holders to be able to ascertain the fair market value of that asset, which is what the IRS cares about, right? Let's remember, when you hit 72 and you have a pre-tax IRA, you have to take what's called a required minimum distribution. So valuation is super important to them. That's why they don't allow you to buy comic books or baseball cards or art, because they feel that the value is more subjective. I may say my baseball cards were $12 and you may say it's worth $3. And the third party may say it's worth $5,000. Whereas gold, there's a marketplace, especially high quality finesse bullion. So that's their focus. Now, an important factor is that the gold, silver, palladium, platinum, bullion, and all permitted coins must be held in the physical possession of a U.S. trustee, which basically means a U.S. depository. You cannot hold this personally in your home, in your pocket, under your bed. If you don't believe me, there's a recent tax court case called McNulty v. Commissioner, came out in November of 2021. And the case is clear. It was someone who used a self-directed IRA LLC to hold coins, and they held the coins in their home. And the case is crystal clear. You have to hold them in the physical possession of a depository. Okay, so holding them at home is not permitted, even coins. These taxpayers, and McNulty basically said that the physical possession requirement should only apply to bullion because the physical possession language goes directly after the paragraph on bullion, or is in the paragraph on bullion, and not seemingly for the entire section, including coins. That wasn't the intent, obviously. I do agree with the taxpayers. It's not a very well drafted section 408M regarding coins. It should have been clear. So the language says this, talks about any gold, silver, platinum, palladium, bullion of a finesse equal to exceeding the minimum finesse that a contract market, as described in Section 5 of the Commodity Exchange Act, requires for metals which may be delivered in satisfaction of a regulated futures contract if such bullion is in the physical possession of a trustee, which, if you look at the definition of a trustee, it's essentially a U.S. depository. So a lot of folks said, well, that language in the physical possession of a trustee directly is connected to the bullion and not necessarily the coins. And the IRS says, no. It's the whole section that is connected to the term physical possession. So they probably should have just said if such bullion or coin is in the physical possession, but they didn't draft it properly. So some taxpayers tried to make the claim that, hey, coins could be held personally. McNulty shut that down. The door slammed on that concept. You probably have heard radio ads or TV ads. I know I have on ESPN or various Sirius channels like, hey, hold gold at home, hold gold coins at home. It's BS. McNulty is now precedent for that. It was, to me, and anyone, I think that was, I would say, without insulting anyone, I think most reasonable folks in the self-directed IRA industry took the position. I know RITA did, which is the organization that IRA Financial is involved in, Retirement Industry Trust Association, which all the major trust companies are members of. Our position was super clear forever that you can't hold coins or metals in the physical possession at home. It has to be in a depository. What about an LLC holding it in a bank account? Well, McNulty talked about the coins at home. It didn't address whether it could be held in a safe deposit box in the name of the IRA LLC. What's the argument? The argument is, hey, the coins are in the physical possession of a bank because the coins are in a safe deposit box. They're not in my home. And the language just says physical possession. It doesn't say possession. It doesn't say constructive ownership. It doesn't say ownership. It says physical possession. Because the IRS would argue, yes, the coins are physically in a safe deposit box in a bank, but you have the key. So you basically have unfettered control, which is what McNulty expanded the definition of physical possession to really also encompass control. So based off McNulty, I would not hold coins or IRS-approved bullion in a safe deposit box in the name of the LLC. Before McNulty, there was a potential argument to be made because 408M language just talked about physical possession, but the McNulty case expanded on that to talk about control, command, unfettered control. And the argument is if you have the key to the safe deposit box, not the bank, then you have the control. And even though it is in the physical possession of the bank, you control it, thus it violates 408M. Whereas if it's in a depository, you don't have the key. You can get it, but you need to work with the depository for them to send you or allow you to pick up the metals. You couldn't just walk in with a key and just get it. So that's the distinction. And McNulty is a super important case in the world of precious metals and self-directed IRAs. So all in all, here's some tips. Make sure the metals are IRS approved, right? Make sure the quality is a finesse. Ask the gold dealer. Do your research on what gold dealer you're using. Research the price of gold. Yes, dealers are able to make some money when they sell to you, but they shouldn't be making exorbitant amount of commission on your purchase, right? There needs to be a fair and reasonable amount that they should make on each transaction. So research, check out who these people are. Most dealers are unregulated, so it's up to you to make sure that they're trustworthy, they're going to deliver the gold, the price is right, all those things that you need to be concerned about. Use a U.S. depository. You can't hold the stuff in Switzerland. 408M is clear. It says a U.S. trustee, which is a U.S. depository. Do not use a foreign depository. Again, if you're doing an IRA LLC, I would be super cautious about that. If you hold it in a safe deposit box at a bank, especially after McNulty. Prior to McNulty, maybe you could have persuaded me, but after McNulty, the fact that it talks about unfettered control and command, I wouldn't risk it, honestly. Depositories are insured, they're safe. I know some people would rather hold it, under their bed or in a safe deposit box where they're close to the bank. I got you. If it was up to me, I would remove the requirement, trust me, but I don't make the rules. My job is to present them to you and help you understand them. And those are the rules in the tax code. So we got to respect them. Everything, all expenses related to the purchase should be paid with IRA funds. Don't use personal money. Keep good records of what you buy and sell. The depository will have them too. When you work with a depository, ask about their insurance, ask about their procedures, so you're comfortable with who you're deciding. Obviously, when you sell the precious metals, everything goes back to the IRA. So that's why it's so advantageous to use an IRA, because there's no tax on the gains. It's deferred back to the IRA. And overall, the biggest things I think about is pick the right depository, but more importantly, make sure you're working with a reputable dealer, someone you trust, maybe someone local. Check their reviews out and check the price of gold, silver, or the coins you're buying that day, and make sure you're getting the fair price and that the commissions they're not charging are not totally unreasonable. And also, there's no hidden costs. Make sure you know what the depository is charging you for holding it. I've heard horror stories where the dealer gives you a price, and then literally, like, when you're about to send them the check or the wire, they're like, oh yeah, the price just went up, it's an extra X dollars. So be careful, don't look desperate. There's lots of gold dealers out there. If you're not comfortable, don't do it. Make sure you're using a US person. So if there is any type of issue, that you have a better chance to get recourse versus someone who's selling it in a different country. I've had clients that have used foreign gold dealers and there was a problem, and it's almost impossible to get recourse against them and use foreign court. So I would work with a US dealer. Obviously, the depository needs to be in the US. Make sure the qualities of finesse, bullion, and the coin American Eagle state minted or a bullion coin. Ask the dealer for proof of the finesse, and just be super careful, because most of these dealers are not regulated. They haven't registered with the commodity exchange. So it's kind of the wild, wild west. So just be careful. There's some good gold dealers out there, trustworthy, but just make sure you're using the right ones. Otherwise, self-directed IRAs are a great vehicle to buy precious metals. You're not going to allow you to buy hard metals or coins at Fidelity or Schwab or Vanguard. Yes, you can buy gold type stocks or ETFs, but if you want to hold a physical bar or coin, you're going to need to use a self-directed IRA, but you should definitely use a US-based depository. Think twice about holding it in a safe deposit box. Definitely do not hold them at home. It's some rocky times right now. I hope we don't enter in recession stage, but the markets are super volatile, and there's really not a lot of safe havens other than gold at this point has held up remarkably well. So I know a lot of clients I've talked to are looking to get some exposure to precious metals, kind of ride out this rocky storm. Listen, we had 2 years of rocket ship type growth, COVID, free money. Things have changed, and now they're kind of reverting back to where they were pre-COVID, and all those rocket ship fuel type momentum is not there anymore. There's no more free money, and reality setting in. Prices are up. It's also big supply chain issues with China. A good chunk of China is locked down under no COVID policy, which is ludicrous, and that's a topic for a different podcast. Like, if you really think you're going to lock out COVID China, like, good luck with that. But they're hurting the supply chains, they're hurting the global economy, whether it's I read somewhere that China did not sell one car in April. So it's people that work in factories that are locked down in Beijing or Shanghai. Guess what? They can't work, right? You can't work from home if you work in a factory. So the supply chain is a big issue, and that's going to still have a major impact on the U.S. economy. And that's why I think inflation will keep increasing throughout the year because supply. There's still demand, even though prices are going up. Americans still want to consume, but the supply is just not there. So I do expect inflation to go up. I expect the stock markets to keep going down for the most part of 2022. Cryptos are going to be tough. So precious metals may be a good safe haven for a lot of retirement investors. And hopefully now you understand you can do it in a self-directed IRA, but some of the things you need to consider, like who you're buying the metals from, where to store them, and the quality of the metal. So thank you for listening. If you're watching, and you can do it on YouTube, check out our YouTube channel, you subscribe. I tend to go do a YouTube live every Wednesday, but I might surprise you. So subscribe, you'll get notification when I go live. Some really good content that I'm really proud of and work really hard on. Hopefully you guys enjoy it and are learning something from it. Guess I get to put my law degree and my tax background to some good use. And that's kind of my focus, and helping educate people, explaining and helping people explore the world of self-directed retirement world, which I believe in and I love. And more and more of you are trying to are understanding and seeing the benefits of diversification and understanding some of the advantages of using a self-directed IRA or 401k to invest in assets and trust, and especially hedge against inflation through the ability to buy hard assets like gold or real estate. So thank you so much for watching, spending some time with me today. You can check AdBits out. It drops every Tuesday. So if you miss it, you can always catch it anywhere you listen to podcasts, or just go to our YouTube channel at IRA Financial. So thanks again for spending some time with me today. Have a great day, and talk to you again next week.